After this recent drop, things are coming together rather beautifully in crypto land. We don't know what's gonna happen, but as it stands from an odds-based perspective, chances are significantly in favor of Bitcoin testing the support zone of this ascending channel, upon which it will then take off again. And we have good cause to expect exactly that, and that's precisely what today's episode is all about, how the technicals come together across the board. Now, first of all, to support a further downside in Bitcoin to the $53,000 to $54,000 range to the support of the ascending channel, we can clearly distinguish on the 1-hour chart that Bitcoin is currently trending. It has been trending since this last week's pivotal top and not since the all-time high. And the reason for this is simple. Since the all-time high, Bitcoin has flung back and forth between its moving averages, which is textbook behavior for a sideways range. It wasn't until this point that we started trending, and the reason why we can distinguish that is because it automatically gets rejected by its moving averages. The normal fashion for any underlying equity is to test its lowest hanging moving average branches a couple of 3 times before plunging through and testing the next one in line. In this sense, I expect something similar to happen in Bitcoin as well, for the price to get rejected and then to test the EMA 100 or even the EMA 200 on the hourly, upon which the price then gets rejected again. And this downwards trending can further be confirmed by the bearish blue channel on the RSI. For as you can see, it's acting really weak. This can best be likened to a swimmer that reaches for the surface to catch his breath before diving deeper. And the same principles apply to the 4-hour chart as well, that looks weak at best. And in this sense, the RSI is struggling to break above the lower bullish red from below. And as we know, this is what we call a bearish motorway, which paves the way for strong movements downwards. Yet in this sense, given that we recently tested the EMA 200, I expect us to also test the EMA 50 or the EMA 100 before plunging down. So in that sense, don't be surprised at all if Bitcoin were to move up to 59,000 to 60,000 over the weekend before turning on a dime again. Now, before moving forward to present our case why this should be a strong area of technical confluence to propel Bitcoin further up, let us first take a look at an Elliott wave count. I've again gone through this count with a couple of renowned Elliott technicians, and this on its own should be a likely roadmap of what lies ahead. In this sense, the main count is the following. We have the first wave, the second wave, and we're in the midst of the third wave. In this sense, we're in the midst of the ABC of the fourth wave of the fifth wave. I know these things quickly become confusing. All we need to know for now is that if this ascending channel were to hold, we could be in for a 50 to 60% pump to the upside. Regardless of what, of course we don't know what's gonna happen, but if we look at it from a statistical point of view, the risk to reward is gonna be freaking amazing. In this sense, if we were to enter a long position, if Bitcoin were to test the support of this ascending channel, and we set a stop loss for a closing below the channel of about 3% safety margin, and we set the target at the channel resistance, we get a 19 to 1 odds. And even if we were to be impatient and enter it already, we'd still get a 4.25 to 1 odds. With that said, given how weak Bitcoin's technicals look on the 1 and 4-hour chart, I see no reason whatsoever to enter it prematurely. So far, we've concluded that Bitcoin is likely to go down, and now we're gonna talk about why this is going to be a very likely reversal spot. In the last episode, we talked about Ethereum's primary line and how close it's been to actually testing it. It hasn't yet done so, and if we zoom on to the daily chart, we can see that it's actually a few percent away. As it stands, we currently have an 8 to 10% downwards move for Ethereum before it were to be ready to test the primary trend line. And we're talking roughly the same in Bitcoin as well, some 7 to 10% depending on how many days it would take for Bitcoin to actually get there. Let's then move on to Marathon. Since its dump earlier this week, Marathon has actually shown a lot of strength. It has tested its primary support line with crystal clear perfection and has since recovered some 16%. And this in turn has further strengthened the case in Marathon versus Bitcoin too. First of all, it did find support on this diagonal line, and now it's back above the neckline again for a very likely kiss and buy. And for all the technicals coming together this beautifully and this quickly, I am looking to reinvest that 50% of my marathon position that I sold off the other day. Things look incredibly strong, especially when we put all the separate pieces together. We're talking Ethereum being close to testing its primary trend line. We're talking Marathon having just tested its primary trend line. We're talking Marathon versus BTC having regained its entire strength and now trending above the neckline. And if we proceed to Solana versus Bitcoin, we can see that that too is trending steadily. And if we move on to the daily chart for some more clarity, we can tell that it's trading roughly 10 to 12% away from the diagonal support line, as in the primary trend line. And in turn, we have a potential big head and shoulders forming. And if the internal price were to come down and test this primary trend line, we have strong reason to expect it to come up and complete the formation. And if this in turn were to break out, we can expect some serious rallies in Solana. And if we look at Solana versus the US dollar and zoom onto the daily chart, we can tell that it's realistically trading roughly 20% away from the primary trend line. And we can hence conclude that if Solana were to test its primary trend line and if Bitcoin were to do the same by going down by 8 to 9%, we can quickly identify that this perfectly matches the 12% distance from the current price down to the primary trend line in Solana versus Bitcoin. And to round things up and to prove how interconnected everything within crypto land is, we'll take a look at Polkadot versus the US dollar. In this sense, we have a potential neckline, a left shoulder, a big head, just like my own, and a potential right shoulder. And this right shoulder in turn is currently supported by a strong historical horizontal support zone. And if this were to hold up and we were to see prices going up to complete the formation, then this right here is where I expect us to see an alt season. In this sense, we'll see Bitcoin moving sideways for quite some time whilst altcoins rally. Now, naturally, and given that the main count looks like this, 1, 2, 3, we should expect the fourth wave to be of equal time impact as the second one. In this sense, this here does look a bit short and should be extended for altcoins to rally, but that is not the point. The point is that when we put all the individual technicals together, we can identify that this is likely gonna be an ideal buying spot. And with that, I'm gonna make myself my Friday Negroni, and I wish you all a nice weekend.